An income statement, also known as a profit and loss statement or P&L statement, is a financial statement that provides a summary of a company's revenues, expenses, and net income over a specific period of time. It is one of the key financial statements used by businesses to evaluate their financial performance and assess their profitability. The main purpose of an income statement is to show how much money a company has earned, revenue, and how much it has spent, expenses, during a given period. The resulting figure, known as net income or net profit, represents the company's bottom line and indicates whether it made a profit or incurred a loss. Here are some key components typically found in an income statement. Revenue. This section includes the total amount of money generated from the sale of goods or services. It may include sales revenue, service revenue, interest income, or any other income related to the company's primary operations. Cost of goods sold, COGS. This category represents the direct costs associated with producing or delivering the goods or services sold. It includes expenses such as raw materials, direct labor, and manufacturing overhead. Gross profit. Gross profit is calculated by subtracting the COGS from the total revenue. It indicates the profitability of a company's core operations before considering other expenses. Operating expenses. These expenses are incurred in the day-to-day operations of the business. They include items such as salaries, rent, utilities, marketing costs, and other administrative expenses. Operating income. Operating income is derived by subtracting the operating expenses from the gross profit. It shows the profitability of a company's core operations after accounting for the operating expenses. Other income and expenses. This category includes any non-operating income or expenses, such as interest income, interest expenses, gains or losses from investments, or one-time items. Net income. Net income is the final figure on the income statement, representing the company's profit after accounting for all revenues, expenses, and taxes. It indicates the overall profitability of the business. Income statements are typically prepared on a quarterly or annual basis, although they can also be produced monthly. They provide valuable insights into a company's financial performance and help investors, creditors, and managers assess its profitability, efficiency, and overall financial health.